The world's largest miner of copper is trying to dig itself out from under a mountain of debt. But commodity prices are down in the pits, and Glencore just reported its worst financial performance since it went public more than 5 years ago. What's the plan to get the mining giant back into shape? Ben Tornquist has more in this report.
From Rio Tinto to BHP Billiton, the world's mining giants are struggling to dig themselves out of mounting losses brought on by a rout in commodity prices. The latest cries of financial distress are emerging from the world's largest copper and zinc miner, Glencore. In the first half of 2016, it raked up a net loss of $369 million, even though it cut production of copper, zinc, coal and oil. Glencore is not the only mining giant to scale back operations, but global markets remain flush with oversupply. The latest loss adds to the burden that's been piling up at Glencore over recent years, and the company's responded by selling assets. Just under half of its agriculture business has been sold to pension funds in Canada, and it's unveiled a new plan that guarantees prices for gold and copper at its Ernest Henry mine in Australia. Glencore stock is currently trading at less than half of its price at the time of its initial public offering in 2011. Analysts cite concerns over the long-term prospects for the industry, not just current earnings.
Countries like China, countries like India are going to be consuming at the same rate that they were over the previous 10 years. That, for me, I think is the big question. And that then brings us as to whether or not the current rebound that we've seen has got legs. Unfortunately, I think the jury is out on that.
Until a few years ago, Glencore led the industry in mergers and acquisitions. Its transformation from a family-owned business into a publicly listed corporation was meant to provide funds for its seemingly insatiable appetite to keep on growing. Now its chief executive, Ivan Glasenberg, says there are no plans to buy assets or businesses. The global glut in commodities has seemingly set the race to scale on its head, and mining giants that were once competing to outpace each other in mergers or acquisitions are now scampering to sell assets and cut size. Ben Tornquist, TRT World.
Earlier I spoke to Craig Erlam, the senior market analyst at Oanda, and asked him why it had taken Glencore so long to tackle its debt.
Well, I think the most important thing is the debt pile that accumulated was quite enormous, one of the largest in the industry, and therefore it had a massive task on its hand, actually reducing the debt load. It put a heavy bet on the commodity industry back when we were seeing huge growth from China, and when China starts to slow and commodity prices start to fall, it leaves itself in quite a nasty position.
Now, we've heard it's been selling off its gold. How long can Glencore keep selling assets to sustain itself with commodity prices being so low?
Well, the great thing about Glencore is it has actually got a huge asset base, so it's got a number of assets to choose from. It has said that it will only sell assets that it deems is getting a fair price for. It deems that gold is at quite a high level now, and therefore there is money to be made here, and I don't think it's going to become much more valuable. So I guess having that massive asset base allows them to pick and choose what they want to sell at the right time.
Now, the world's mining giants appear to all be affected by this, from Rio Tinto to BHP Billiton. Why?
Simply because I don't think any of them truly saw coming what we actually saw in the last 2 years. I think the mining industry in particular is one that has historically been heavily invested in, and an industry where we've seen companies become very over-leveraged at times during these mining booms, and that's exactly what we saw on this occasion, and now the companies are paying the price for that. This is one of those industries, like I say, where you do see these huge cycles, and the companies don't hold back when times are good, and they don't hold back when times are bad either.
Now, Glencore led the industry in mergers and acquisitions. Was this a mistake?
I don't think so. I think the company has always carried this out, and they've always been quite ambitious. I guess one of the advantages they have here is having such a diverse portfolio as a result of all this M&A activity. They now are able to consolidate in such a manner where they, like I said earlier, they can pick and choose what assets they want to sell and don't have to just get rid of the assets that are not in keeping with the business, but in getting rid of assets that they can actually make some money from and still continue with the core activities.
OK, Craig Erlam from Oanda, thank you.